One reason to invest in blue chip companies. Have you heard this? People will ask you to invest in blue chip initially if you're a beginner, or even if you're a seasoned investor, they will ask you to stick with blue chip. So that reason you are going to see today. Hi, hello, this is Ganesan, your millionaire coach and author of the book Money Leaks. In today's video, you're going to see this video, see this information. Before I begin, please click the subscriber button because you will be going to get lots of information on wealth creation, stock market, investments, mutual funds, insurance, etc. Everything about financial services. So please click the subscriber button. So let's get into today's video. Today's video is all about one reason why you should stick with blue chip companies. Blue chip companies are something like huge, big companies like L&T, Reliance, HUL, Hindustan Unilever, Maruti. All these are big companies which are the top 30 to 50 companies. They are generally called as blue chip companies. And you need to stick with blue chip companies is that they had grown. They are mature companies. They created a market value. They created a brand value, and because of that, they occupied a market share. Meaning, if you are starting a new car company, can you take a big share from Maruti? It's really difficult. You can take a share from other set of companies, but not from Maruti because it is in the industry for the last close to 37 years. And if you look at, they have launched huge products range in the between the starting range of 2 lakhs, 2 to 3 lakhs to 14 15 lakhs, I think so, not sure, but SUV, still SUV category. Let's look at that point from Maruti 800 Alto to SUV category. So if that is the case, it's difficult to break the Maruti's chain, and the people feel that Maruti is close to their heart, so it is difficult to break the thing. So if that is the case, so can you start a company and overtake Maruti in another 5 years? It's a really a difficult thing to do, because with that war chest, with that money, they will overcome what kind of challenges coming along. So this is the advantage of sticking with a mature company. If they are doing mature business and they are having a good profit margin, return on equity, the debt to equity is zero, almost zero. The cash value is so much in Maruti. If this is the case, that is the advantage of blue chip companies. And so this is not the reason, right? So we'll wait for 2 more minutes. So if this is not the reason, if blue chip companies all these are mature reasons, right? And people will say that if you're investing in small and mid cap, you will say you will get huge returns, but the risk is also associated, because any company, if you're starting newly, if you want to compete with Maruti, what you will do, you will do whatever, so many changes you will. Even if you are a startup and you get money from investors, if it is not utilized properly, whatever the management, a startup or existing management of the company, if that is not utilized, what will happen to the company? Automatically the people will lose their heart and they will not buy the cars, and the car ranges will come down. One negative news is more than enough for the any existing company to lose their market share unless they can repair it. So if that is a scenario, what will happen? And small and mid cap companies will suffer. You will lose your money. That has happened in n number of cases. But if it is a blue chip, if it is a large cap companies, in the last 10 years, if you take a data of large cap companies in the last 10 years, they had given consistent returns of around 15%. The return on equity of that range 15. And if this is the case, the stock has grown. When you compare a large cap with small and mid cap in the last 10 to 20 years timeline, automatically the large cap is winning hands down. That data I showed you in a previous a couple of videos ago, and it came in I think Morningstar, not Morningstar, it came in um, one of the leading magazines, Wealth Insight, I think, Wealth Insight. So that is a magazine which came in. So this is what is available. Once you analyze a company, you will get lots of data. This is the reason. But one reason what I like is the market share. So market capitalization, because Reliance is around 13 lakh crores, Hindustan Unilever is around 4 to 5 lakhs, or TCS is around 7 lakh crores. These are huge market share companies. To knock off this market share, it takes a lot. Unless and until the company alone will keep bad things about themselves, keep bad mouthing, or they are not taking care of their clients, they will come down automatically. This is what they can do. But apart from that, no external forces can break down the company. That much huge they had become. So any blue chip company, most of them, they had grown so much. Only they can bring down the things. They can they can build the castle. They can bring down the castle together, because the market capitalization, the it's around, just think of more than a lakh, 1 lakh crore, 40,000 crores, 50,000 crores. These are huge numbers. Britannia is around 90,000 crores. These are huge companies. Do you think is it easy to break down the market cap from 80,000 to 40,000? It's like losing 50%. And any active management will make sure that they are listening to the market, they are understanding what is happening, and they will reach out and they will make sure the innovation things will come in, and they will again capture the market share. This is what has happened in the. I'll finish off with this story of Colgate and Patanjali. In between 2016, 17, 18, in 16 and 17, visibly Colgate has lost its market share because Patanjali has made a splash, and they made sure the toothpaste and all these things are taken care. But slowly, Colgate realized something is happening. Earlier, they didn't take a bigger thing about Patanjali and the products. But slowly, they launched Colgate Ved Shakti, Ayurveda, all these things they brought into the brand, and they regained the market share, because of which the stock has rebounded in the last 2 years. So this will happen only when you are clear. When the market share is huge, they will make sure you should watch the news, and this is an advantage. Just because if it's a big company, they will come back. That is a story. But again, you need to keep an eye whether are they taking care of this current market situation. What are they going to react? All these things. So hope you're clear. So if the market share is huge, this is one thing which will differentiate all the big blue chip companies, and this is the one thing which, because of which you should invest in blue chip companies. Not only initially, even in the future, maybe 60 to 70% should be in the blue chip companies, because ultimately we need wealth that will get created. And 30% you can take a chance with mid cap and small cap, that to quality companies. You will be on your way to create wealth. Once again, this is Ganesh, your millionaire coach and author of the book Money Leaks. Thank you so much for watching. If you liked this video, please click the subscriber button, and if you loved this, please share this video with your friends so that they will also follow me, and they will also get lots of information about stock market, insurance, mutual funds, etc. on all the financial services. Thank you so much for watching.